Hello everybody and welcome to Project Trade. This is the trading highlight show, all of the fantastic photo-friendly moments from our testing of trading strategies. With this one we are testing another reversal strategy. We're going to mix it up with our key entry approach. We're getting one technical indicator into use with one price action concept to follow. Our technical indicator is the money flow index, that's the MFI. No surprise to see this one appear in a reversal strategy. It is an indicator designed to find those overbought and oversold signals, and handy that it also takes volume into account for its reading as well. Here's what it looks like on the charts, and although by default the MFI looks back at a 14 period range, we're going to shorten that down and input our MFI with a mere 6 periods. So we're looking for those sharper responses. We do still have the overbought and oversold levels set in the standard positions though. That's at 80 for overbought and 20 for oversold. And that's all we need from the technical indicator side of things. Let's get to our price action concept. We are going to be using one of the most common trading ideas out there. That is the idea of support and resistance zones. For anyone unfamiliar, these are essentially price levels where a reversal can be seen as more likely to occur because a price reversal has already occurred at or near to that area before. Let's give you a support level example so we can see. Here we have a price chart which is looking rather bouncy. The price springs up off of the same area multiple times, repeatedly treating that price region as a support zone before it finally breaks through over here. But even after that rush down through the support level though, price does come back up to the same area again, reaffirming once more that the area is noteworthy for traders. We can see the opposite of support zones on this chart, a couple of resistance levels here instead. Price is bouncing down from the resistance zone. Here's one level we can see, it bounces off of there twice, and here's another level just a little lower in price. Again, it bounces from the same region twice. Now we know what we're using, we can see how they're going to help us into the trade, remembering that this is a reversal strategy that we're after. First off, the MFI, we'll need to see a reading either above 80 or below 20. Above 80 will signal to us that price is overbought, so we'll look for a sell trade. Below 20 is the opposite. Price at that stage is apparently oversold, so it would be a buy trade for us to look at. If we get either of those signals from the MFI, then we can look to the support and resistance next. If price is at a resistance zone and we've already got a sell signal from the MFI, then we can look at getting into a sell trade. Equally, we'd look for a support level for a buy trade if the MFI is oversold, and if the support is present, that opens us to the trade. We won't have hard, exact rules for the support and resistance levels, just a common sense approach to look for on the charts. Naturally, levels that have been bounced off of multiple times may seem appealing as they will look stronger on the charts, but some say this in fact makes them more likely to break, so we could be looking at zones which have had just one bounce off of them and are ready for that second bounce that we see so often. It might also depend on how often we get signals coming through, whether we have the privilege of being more selective with our trades or whether we want to get straight into one. Here's an example of a sell trade entry signal though. If we look to the MFI indicator, we can see where it goes overbought. That's just here, and at that point we could look up at the price chart and see that we could be up at a resistance level as price has bounced off of that area previously. If we did treat it as resistance and jumped into the trade, you can see the sharp drop that comes from those 4 downward red candles that follow. We'd have to be pretty greedy to not get into profit from that move. Now let's demonstrate a buy trade example. We actually first get an oversold signal down here, but if we look up to the price chart, we can confirm that it's at a support level yet. From what we can see, it hasn't even bounced off that level once previously. But when we get the second oversold signal across here, we know that price has previously bounced. So using this region as a support zone, we could take the buy trade, and there are a few green candles that follow which would likely see us into profits. Makes sense to me. Those are our entry signals, and now we need to know how we're going to get out of the trades whilst aiming to secure as much profit as is reasonable to expect. To assist us with that, we'll be using the old favorite, the average true range indicator, aka the ATR. For those unfamiliar with the indicator, it simply averages out the price per period. This helps give an effective volatility and risk balance when choosing stop loss and take profit levels. There it is, the default input for us here, 14 periods. So it's looking back at the last 14 periods of price and averaging out the range of those periods. Once we've got our ATR value, when we enter the trade, it will split our one trade signal into 2 sub-trades. Sub-trade A will be 1.5 times ATR distance to the stop loss and 1 times ATR distance to the take profit. We're going to try and grab some quick profits, give us a bit more room in case we're too soon to the party with our trade entries. strategies, although it does of course risk more on the loss than we stand to gain on a win. Subtrade B will be wider both ways with a 2 to 2 times ATR ratio between the stop loss and take profit levels. Assuming we do actually get into some trade entries, the subtrade B trades could hang around a while before hitting the stop loss or take profit. As long as we get more wins than losses from them, we'll be all good. We're going to crank up the risk a bit on this strategy as well and trust in our signals that we get, going in with a 4% overall capital risk per trade. We'll split it out between the sub trades of course, so they're each at 2% capital risk. Hopefully that gets us up there. We'll be trading on the daily time frame, 1 full day per each candle on our chart, so a pretty long-term view of things. And it'll be the key 28 currency pairs from the majors and minors that we're trading on. Currencies are the US dollar, the euro, the Japanese yen, the Great British pound, the Swiss franc, the Canadian dollar, the Australian dollar, and the New Zealand dollar, all going up against one another. And if we do get multiple signals on the same currency, we are going to get into those trades regardless of how many trades we've got on that same currency. We're really going to try and push it on this one. We'll keep a trading journal to be safe though, so we can track our progress instead of simply assuming that we're in profit. Nothing beats a written record. Okay, that's all we need. Ready, set, go. Let's get into MetaTrader and get onto those charts, find some trades. Okay, so here we are on the charts. Just got the euro US dollar pulled up. Fairly standard currency pair for our demonstration here of what we're looking at. You can see we've got the money flow index there at 6 period input. All we're going to do is cycle through the 28 currency pairs that we're looking at and just see if the MFI is in overbought or oversold territory for any of those currencies. If it is and we've got support and resistance, that's when we'd head to our average true range. You can see there 14 period input. But alas, we can see here the MFI is currently just giving a reading of around about 54. So no signal, we can just move along. Have a look at the US dollar CAD. Oh, it's just come out of the oversold region. We'll keep going through all 28 pairs. As per usual with these strategies, not going to talk about every single currency pair every night, just if there's anything worth reporting on. Euro Swissy comes out of the overbought as well. Looks like there would have been a signal in here somewhere, because you can see this is a sort of resistance level back here. Price accumulated around, bounced off there and come back down. So it'll be interesting to see where this one goes next. Not a signal for us now, it has passed, but what could have been just a few days ago. Aussie dollar, US dollar coming out of the overbought, and again, it looks like this could have been a signal for us. Easy to say with hindsight, but if we look back just a few candles, might have gone in here with this as a resistance level previously. It is a little bit lower than the tops of the prices though, so maybe we would have been patient for it. Hard to know, but we'll see what happens next with it. Great British pound, Japanese yen, that's going overbought, currently reading 81.40 on the MFI. But not at a resistance level. It is at a higher peak than previous. You can see there was a nice resistance level around here, here, especially these first two. That would have been a very nice signal if we've been patient enough, because you can see it went overbought originally all the way back here. If we waited all the way up and got in right up there, that would have been a dreamer. As it is, has pushed to a higher high, so nothing for us to get into here. But at least we are seeing an overbought signal. Gives us some promise that we're not going to have to wait forever before we get in. Hopefully it will get them coming through. But unfortunately, none tonight to get us started. Since these candles are worth a full day, we don't have another set of information until tomorrow. You can see it's just coming into half an hour before the close now. You do want to try and get as much information as possible in that candle. Leave it until the last hour of the day. That's what we're doing here at least. And we'll do the same thing tomorrow when we come back at a pretty similar time. Here we are back on the charts 1 day later. Just over 20 minutes until the close of our candles. All we're doing, same again, just going to look through the 28 currency pairs that we're trading. Have a look for that MFI in the overbought or oversold territory and go from there. The Australian dollar Swiss franc pair, it is going to close just inside the overbought territory of the MFI. So we can look, but I don't think this is quite as much the resistance level that I'd like to see. So very close to this region and up here. So maybe if it was closing at the high of the candle, if we do see a couple more green days that push it more to around about this level, then maybe we'll have a go. Pretty close. Same with the New Zealand dollar, Canadian dollar. Wouldn't begrudge an entry here. It is sort of level here and here, but just want to give it one more day, see if it can get a little bit higher. Definitely promising on this chart though. I do think here it's going to be worth a pop on the New Zealand dollar, Japanese yen. We got the MFI in the overbought territory. It is a little bit shaky because you can see on the previous peak, it did break through the current level that we're at. But it is hard to ignore it when there's 4 previous peaks that are all pretty much bang on exactly in the area. Over here it came out as well. Might be a bit of an over-established region at this point. Either way, this is going to be our first trade, so let's get in there. Alrighty, our risk is calculated on the screen now. Remember, subtrade A is going to have a 1.5 times ATR stop loss, and subtrade B will have a 2 times ATR stop loss. So for subtrade A, it's 0.15 standard lots, sell the market. And for subtrade B, a little bit less, but again, of course, selling off the market. Stop loss and take profit for subtrade A going down, 1.5 times stop loss, 1 times take profit. And subtrade B, 2 times ATR stop loss and 2 times take profit. There it is. So you can see we have got a real bit of width away from the stop loss all the way up here. And that's just for subtrade A. Subtrade B even higher. And you can see they're risking $196.80. So that is around about $200, 2% risk, just as we planned. So that's our first trade, New Zealand dollar, Japanese yen. Still got a few charts left to check. New Zealand dollar, Swiss franc goes overbought, but not in an area yet. Maybe if it wants to push higher to this sort of zone, might think about it bouncing back then. No resistance right now. That is it then, just one signal to get us going, but it didn't take long overall, only 2 days of checking. With our $10,000, we are risking around about 400 from this trade, 4% overall, so a little bit risky. But there's plenty of gains to be had if this is truly a resistance level, and it does look like it could be quite strong, particularly these peaks. It is right on the money, and it would really have to push above the price range to hit the stop losses above this previous peak here. There's potential on this one. Let's come back tomorrow and see how it's getting on. And we are back for day number 3. Looking quite good for our New Zealand dollar Japanese yen trade. Not quite near a take profit level yet, but we are en route there. Currently $75 up between the two sub trades. So not too bad. I've had a look ahead as well. Let's see our key charts for the night. Euro US dollar just about going oversold. 18.9 on the MFI, but not at a good support level. So not interested in that one. Same with the Euro Aussie dollar. Oversold just about there. But you can see there's not really much. It's hit around here a while back. That was about a year ago. Not enough for me to be confident in it. New Zealand dollar Swiss franc is overbought, but again, nothing in the region for a resistance level, so not interested there. Then we've got 3 which are a bit better: the Euro New Zealand dollar, the New Zealand dollar Canadian dollar, and the Australian dollar New Zealand dollar. We're already in the NZD Japanese yen, so I think we're just going to go for the best of these 3. That'll put us into 2 New Zealand dollar trades. Don't want to go too crazy on it. 4 could leave us in quite big capital risk. The new one that we'll be going with is the Australian dollar, New Zealand dollar. Been coming down quite sharply and has now gone oversold on the MFI. And there's a couple regions here and here where prices accumulated before. Seeing that sharp run down really wouldn't surprise me to see a return. So this is one we're going in on. You can see the risk calculator on screen. This is based on an ATR of 70.8 pips. 0.32 lots for subtrade A. That's 1.5 times ATR buying in. And 0.24 standard lots for the 2 times ATR trade. Again, of course, we buy the market. Let's set those stop losses and take profits. There are those levels. We'll see where the MFI gets us. Not the worst signal, just has to get back up to this previous resistance level established around about these sort of peaks, and it'll be profit on both those sub trades. There we go, 2 trades we're in now, both New Zealand dollar pairs. As I said, we will keep an eye on those other New Zealand dollar currency pairs, just in case one of them does give a signal that we can't resist and we just start piling in, all in on the Kiwi maybe. But for now, we'll leave this as is and come back tomorrow, see how they're getting on. Okay, we do come bearing good news on day 4. As subtrade A for the 1 times ATR take profit level, that has triggered. You can see we've taken just shy of $130 when we take the swap into account. But overall, pretty nice. Let's have a look at it on the 5-minute chart, because I think we were quite close to the bottom. Yeah, we certainly were. Right at the bottom of this trough. It did go a little bit lower here, but really that is very close to the bottom. So quite pleased with that. Subtrade B still going, of course, just over $50 up on that one, but a long way to go. We could be in this one a while. Let's see how it goes. Meanwhile, the Australian dollar, New Zealand dollar hasn't gone to the good, but it's only just dropped by a little bit. Only around about 1/5% down, so still plenty to play for on this one. How about the other charts? Euro US dollar stays oversold on the MFI, and it's getting closer to a support level down here. Still watching this one closely. We might get a good signal sooner or later. New Zealand dollar, Swiss franc, still in the overbought territory, but it is going to have to climb higher before we get a good look at it. No trade there. And Euro New Zealand dollar, still don't fancy this one just yet. It is oversold still on the MFI, but it hasn't really moved much today in terms of price. So I think if we didn't take it yesterday, there's no real point in taking it today. US dollar Swiss franc goes overbought on the MFI. It is above this level here though. 1, 2, and 3 bounces off there. The last bounce not quite as much as the previous two, but I think we just looked too far up above it to get into the trade. That is it for signals, but at least we're off to a good start. Taking home that little bit of profit puts a smile on our face, and also begins a bit of an undefeated streak now. 1 sub trade. So far so good. Let's come back tomorrow. Day 5, it is the last day of the week and the first Friday of the month, so we did get non-farm payrolls. Came in pretty strong for the US job sector. Fed would ideally want to see it level off, I'd imagine. Can't see Jerome Powell and co being too happy to strong job support. For us, our New Zealand dollar Japanese yen trade went back right against us. Not near the stop loss, so we're good for now, but still got to watch it. Australian dollar, New Zealand dollar, that did make a run up towards the first take profit level today. Couldn't get there though and did pull back this afternoon, ever so slightly above our entry price at the moment. So not too much going on with our trades. On the other charts, Euro did bounce against the dollar. In fact, it's a pretty weak day for the dollar in general across the board. So it looked like if you believed that this was a support level yesterday, you'd be looking pretty good at the moment. But I don't know, it doesn't seem very sporty to me, just the way it goes. And same with the dollar Swiss franc. If you had this as a reversal level, you would be in it today. It did go overbought on the MFI, but it was above these previous peaks. Euro Great British Pound is sort of close to a signal. It is ever so slightly overbought on the MFI, but I'm not sure with this one. I can see it's a resistance level here from about 10 days ago or so. But before that, it's really not that close to anything. There's nothing there. It gets even further back here and dips down away. So I don't think this is one we're going to go in on, but certainly interesting to see what happens with it. Same with the pound Australian dollar. Not quite there for us at the moment. Yeah, it is a bit of a support region, but I'd want to see it go to the bottom of that region because all over here price is accumulating. You can go off this particular candle and say, okay, it's definitely going to be an exact bounce up, but really I would rather see it go oversold at around about this level here before we think about jumping in. And it's still tempting on a couple more New Zealand dollar trades. I really don't want to go all in against the NZD. Euro here could easily bounce from where it's at now. It's been there a couple times. Does seem like a good region. Same on the CAD, although it hasn't really been a resistance level before. It did make quite a strong support level for a month or so where we're looking at. Again, tempting. I think we'll wait and see one more day for the Euro NZD. If it comes down a bit more, stays oversold when it does that, it's a good chance we'll be getting in on Monday. But no new trades for us today. We'll just take it to the journal to round off the week. Just a quick word on the journal then. You can see it all here. New Zealand dollar Japanese yen trade up the top, Aussie New Zealand at the bottom. That's 2 trades in our first 5 days, so I imagine we're going to be busy for the 9-10 weeks that we're taking signals. Certainly were other ones that looked like we could have got in on them, but maybe weren't quite a support resistance level or too much risk on the New Zealand dollar. A lot of potential involved though. And we do finish the week up, which is nice to see. Of course, sub-trade on the New Zealand dollar Japanese yen came in good. That's the only one to have closed out so far, so we've still got 3 open sub-trades, and I'm sure many more trades to come in the weeks that will follow. Alright, there we go. Let's come back on Monday.